and welcome to this Moneycontrol live stream. You're watching a brand new edition of Morning Trade with me, Tata Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, stocks like Tata Motors, DLF, and a whole host of other stocks. And of course, we'll also be taking your queries up with our technical expert on the show today. So if you have any queries, do send them in to us on our YouTube feed and we'll have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Wall Street ended lower on Friday, clocking a second straight week of losses as concerns over the state of the US economy weigh on sentiment. Asian markets too open lower while the SGX Nifty is hinting at a negative start for the Indian market. Retail inflation drops to a 19-month low of 4.7% in April, allaying all fears of any rate hikes from the RBI. Meanwhile, IIP for March falls to 1.1% as compared to a poll of 3.8%. Tata Motors delivers strong numbers across businesses while CV business margin hits a 17-quarter high. DLF too delivers a strong set of numbers with record bookings and collections while DMart reports lower than expected margins. Two Adani Group companies, Adani Transmission and Adani Enterprises, announced plans on Saturday to raise up to 21,000 crore rupees from the market. Announcement comes months after a short seller report battered investor confidence and drove a massive sell-off in share prices. Meanwhile, the Supreme Court will decide on SEBI's extension plea in the Hindenburg case today. Congress sweeps Karnataka, winning 135 seats to comfortably cross the halfway mark as the state continues its trend of anti-incumbency. With the loss of Karnataka, the BJP has also lost its only bastion in South India. Well, before we move on to all the market action, let's take stock of all the important news from the world of politics. Now, Congress has wrested power from the BJP in Karnataka, winning a landmark 135 seats as anti-incumbency and development issues hit the Saffron Party hard. After heated campaigns and star-studded rallies from the BJP, including by the Prime Minister Narendra Modi, the results were more one-sided than what many would have imagined. Congress cruised past the majority mark with 135 seats in the 224-member assembly, while BJP had to settle for 66 seats. While JDS played kingmaker last time, this election delivered a clear majority to the Congress senior party. Leaders like DK Shivakumar, Siddhartha and G. Parameshwar are the top contenders for the Chief Minister's post. Congress National President Mallikarjun Kharge has been given the responsibility to pick the CM. The key contenders are set to hold a meeting with the Congress President in Delhi today. Well, let's get on board then. Our technical expert for today, Rajesh Palviya of Axis Securities, joining in this morning. Good morning, Rajesh. Good to have you on the show. Weakish cues coming in from the SGX Nifty. Wall Street clocked a second straight week of losses. So globally, cues coming in are quite negative. Do you think the Nifty will, take a back seat and maybe see some kind of a sell-off in today's session?
Good morning, Nandita. So since last two trading sessions, we are seeing that, Nifty is struggling to give decisive breakout above 18,300 mark. And this is the second consecutive day where we are seeing that, from higher side, the Nifty is struggling to cross those levels. As Nifty is comfortably trading above 18,200 level, so that is the positive in terms of technical setup. Even on the derivative front also, so most of the call writers who were there at 18,200 already covered their short position. But still, in last couple of trading sessions, we have seen, some of the call writing is there for 18,300, 18,400 strikes. So these levels are likely to act as a immediate supply zone for the Nifty in near-term basis. So until Nifty not crosses above 18,350, it's going to remain in range-bound kind of behavior we can expect for some trading session. On the downside, 18,200, 18,150 are the immediate support area for Nifty. So we are expecting some consolidation at current level, 18,150 to 18,350. Either side breakout or breakdown will decide the fresh course of direction for the market. But looking at the overall texture, we believe that, the whatever, volatility we are expecting ahead of this due to this global cues as well as some political cues which we have seen from the this recent election outcome. So we expect, once these selling pressure settle down, again, market will give a breakout on the higher side and possibly Nifty can continue its upward momentum towards 18,500 in coming trading sessions. So overall, the structure is positive. Buy on dip should be your strategy. Your stop losses should be around 18,150 for Nifty.
Right, that's the view on the Nifty. Hold on to that thought, Rajesh. We'll be coming back to you, but let's also bring on board my second guest for today, Siddhartha Khemka, who's the head retail research at Motilal Oswal Financial Services, now joining in this morning. Good morning, Siddhartha. Good to have you on the show. Sentimental impact expected to come in, given the fact that we've seen an unfavorable verdict when it comes to the ruling party. So. Would you advise investors to look at buying on dips, given the fact that Nifty has run up quite a bit and is just about 2 to 3% away from its all-time highs? Well, we are experiencing some kind of a glitch. We'll come back to Siddhartha. But Rajesh, I want to get in your thoughts on Tata Motors. A strong set of numbers coming in. In fact, the stock has been cruising above that 500 rupee mark. Where do you expect Tata Motors to open today, given the fact that numbers have been strong and JLR has been firing on all cylinders? Looking at taking positions in this stock in today's session?
Yeah, definitely. The stock has given a very strong breakout on the monthly chart, almost a consolidation of 8 to 12 months, and now stock is continuously showing, its strength on the daily, weekly time frame. Stock is enjoying all its moving averages. And looking at the technical setup on the weekly chart, stock has managed to give breakout of its previous swing high of August 2022. So looking at the technical setup, yes, we believe that this upward momentum can continue further higher. 545 to 555 could be the near-term target for Tata Motor in the continuation of this uptrend which we are seeing since last couple of weeks. So one can hold their long position. Immediate support area for stock is at around 490. So till stock is not breaking below 490 level, one should remain on the buying side of this stock, and on the high side, 545 could be the near-term target.
Well, 545 could be the near-term target on Tata Motors. Hold that thought, Rajesh. I think we've got Siddhartha back. Good morning, Siddhartha. Is my voice reaching you?
Yeah, good morning, Nandita. I can hear you loud and clear.
Right. Hi, good morning, Siddhartha. So, do you expect some kind of a sentimental rub-off on the markets, given the fact that we've had an unfavorable election result when it comes to the ruling party, and given the fact that the Nifty is just about 2 to 3% away from its all-time highs, is this a time to adopt a buy on dip strategy when the markets are concerned?
Yeah, very good morning, Nandita. So, I think the election outcome, though has not been as per the expectations. Even if you look at the final outcome of Congress winning 135 seats, it is better than the best tally that the exit polls had suggested. But one thing that we clearly see and have been seeing in the past is that there is a diverse you can say the sentiments when it comes to the Lok Sabha election as well as the state elections, and that we have seen that consistently on several state elections where the regional parties have got higher votes, but in the same state, maybe a few months later, when the last assembly with the Lok Sabha elections, BJP got much higher state. So I think overall, definitely a bit negative on the sentiments, but I think that the state election will not have a very big impact on the markets as of now. Also, if you look at the undertone for the markets have been pretty strong. The result season have been going on, which has been better than expectations on far more counts, where the disappointments have been far less. And on back of that, we have seen that the global markets have been supportive. FIs have been consistently buying. So definitely there is a case for the market momentum to continue in the coming days.
Right, the momentum is expected to continue in the coming days. You're talking about the earnings season. The disappointments have been far less than the number of companies who have outdone expectations. But IT is one pocket which has actually disappointed when it comes to its quarterly show. Underwhelming numbers from TCS, Infosys. But on the other hand, mid-cap IT has managed to outshine larger peers. But sticking to large cap IT. After the earnings, which one would you prefer now, TCS or Infosys? Even though there is a lot of uncertainty when it comes to the coming quarter in the wake of, an uncertain global environment. But if asked to choose between these two, which one would you prefer now?
Yeah, Nandita, I think you hit the nail and you picked the disappointments first. With definitely there was a big disappointment with IT and especially some of the large cap names, where the growth definitely came in lower than expectation. But what also surprised was the sharp reduction in the outlook, or the change in the outlook. And Infosys was pretty, you can say, vocal about its growth concerns, especially if you look at the next few quarters. So overall, I think the mid-cap IT, they reported stronger numbers. And if you talk about the large ones, between Infosys and TCS, I think the growth outlook for TCS looks better. Although we have a positive view on both Infosys and TCS, but at this juncture, I think I would prefer a TCS over Infosys, given that TCS has a much diversified book and a larger book. The order book also is pretty strong, with a strong, healthy pipeline. So if you look at even in terms of market leadership, in terms of valuations, TCS has always taken that. So I think between the two, the preferred would be TCS, followed by Infosys.
Right, TCS will be the preferred pick in the IT space. Let's also talk about some of these rate-sensitive banks, autos, and realty. The numbers from these sectors have been pretty good, with banks, of course, taking the leadership. And, with the recent inflation data coming in below that 5% mark, looks like we are completely done with the rate hike cycle. In fact, if nothing, we could look at a rate cut coming in soon. So given that, do you expect, the rate sensitive to take leadership in the current market setup?
Namita, I think the rate sensitives have already taken the leadership. We are seeing this strong outperformance from banks. NBFCs have started participating after the RBI took a pause. Although there is an expectation of a rate cut, but I think it is still some time away. Given that Fed has just taken a rate hike and is likely to pause for the next two meetings, but unlikely to see a rate cut. We will likely to see a rate cut only towards the end of the year. But having said that, definitely the rate sensitives are doing well, both because of what is happening to the interest rate environment, but largely because of the good demand or the business environment for banks, for NBFCs. There, the credit growth has been pretty strong. NPAs have been, you can say, controlled, and NIMs have expanded. So going ahead in FY24, although we are expecting the NIMs to kind of normalize and don't see any further expansion, but the strong credit growth, controlled, you can say, the asset qualities would lead to a strong earnings growth for banks, NBFCs. Even if you look out on the auto sector, demand has improved. There have been challenges on the supply side. That is improving quarter after quarter. The semiconductor chip availability, that is improved. Newer model launches by across companies, that is helping. EV penetration is helping some of the companies to improve their growth.
Right. I think there's an issue with the feed once again. We'll touch base with Siddhartha once again. But Rajesh, coming to you now. The stock of the day for me today would be DLF, given the fact that it's reported a very strong set of numbers. In fact, bookings and collections are at a record high, and cash generation, in fact, it's also at a record high. Higher bookings have been led by new luxury product launches, and profit has surged over 40% on a YY basis, even though revenue has taken a dip of 6% or thereabouts. On the charts, DLF, how is it looking now, Rajesh?
So most of the real estate stocks have done well in the recent past, and looking at the overall setup for all the real estate stocks are showing, a strength in near term as well as on the short term setup. We believe that, this sector can continue further more upside. And even if we talk about DLF, the stock managed to give breakout of its multiple resistance zone. And looking at the near term, short term setup, we believe that, this upward momentum can continue further higher. We are projecting target of 460 to 465, and the continuation of this uptrend. One can buy even if any, chance they get around 425, 420 zone. Keep stop loss of 415 to hold your long position. 465 could be the near-term target for DLF.
Right, 465 near-term target for DLF. Just coming back to Siddhartha then. Siddhartha, before I let you go, I want to get in one last question. Which are the other themes that one can look at investing in the current market scenario, aside of rate sensitives?
Yeah, thank you. So I'm really sorry for the bad internet today, but I think if you look at the overall themes that could do well, I think apart from rate sensitives, the capex theme continues to do well. We'll see four more state elections coming up in the next 6 months, and then the Lok Sabha election in mid next year. That is a theme that continues to do well. Apart from government capex, the private capex cycle has also picked up. So you will see the infra companies, the cement companies, the capital goods is a space where we have seen consistent improvement both in the order book as well as in terms of execution. We saw what L&T reported. We saw the strong numbers from the likes of Siemens. So that is something that is, as a theme, should continue to do well. Defense is a niche space within the capital goods space, and again we have seen the strong order flows from the Indian government. Also, the defense space has now opened up in terms of exports, and a lot of these companies are reporting the exports order. So that should do well. Another theme that we like is the hospitality space, the hotels. We believe that very strong demand after almost 8-10 years. Supply has been constrained, so occupancy and the room rates, average room rates, both ARRs have seen strong improvement. Margins are on the rise. Companies have expanded on an asset-light model, so we prefer Indian Hotels and Lemon Tree as a preferred pick within the hospitality space.
Right, so those are the other themes to watch out for in the current market situation. With that, Siddhartha, thanks a lot for taking out time and joining us this morning. It was a pleasure chatting with you. Well, with that, let's take up some of our viewer queries with Rajesh now. Rajesh, first up, queries from the consumption basket. Manish Rai wants to know your thoughts on ITC, and we also have Aniket Kumar who wants to know your thoughts on HUL. Between the two, which of the charts suggest a more upside going forward?
So ITC is clear winner from this FMCG basket, and we have seen, sustained uptrend is there in the stock. And looking at the overall setup for long-term, medium-term, short-term, stock is in bullish trend. Some profit taking is happening from recent high, but still, if we analyze on the multiple time frame, it's in bullish territory. So we will continue our bullish view on ITC, and we expect then this rally can continue further higher in coming months. And for short to medium term as well as for long term, we are projecting this stock can continue further more upside towards 540, 550 zone on the coming months. So one can remain invested in the stock, and if any dip you get due to volatility in the market, you can buy in the dips also. Your stop losses should be at around 370. So buy and accumulate is the strategy for stock if any downtick you get in the stock. For near-term perspective, yes, we do believe that Hindustan Unilever can also continue further more upside from recent this up move. We have seen that stock managed to view breakout on the weekly chart of its down sloping trend line, and looking at the breakout, we believe that this movement can extend further higher. 2750, 2800 could be the near-term target. One can buy this stock also with stop loss of 2570.
Right, that's the call on ITC and HUL. Remember, ITC will be reporting its earnings on the 18th of this month. Let's now take up a query on Sun TV. This one is coming in from Rajesh, and he wants to know your thoughts on this counter. Stock has shed somewhere around 11% on a YTD basis, has been in a steady downtrend and has come off 52-week lows, but still in a downtrend. More downside going forward?
So looking at the monthly setup, the stock has taken the support from its June 2022 low, and almost it's a kind of double bottom formation is taking place in the stock. But still, we do believe until the stock not crosses above 460 level, we won't get any confirmation of this double bottom. So above 460, yes, there could be some more buying interest we can expect in the stock prices, and then possibly once the stock crosses above 460-65 zone, then this stock can move up higher towards 520 zone also. But looking at the near-term setup, some weakness is still there, but some sort of recovery is taking place in the stock since last couple of weeks. So we do believe if stocks continues to hold above 415 level, then possibly there is a possibility of 465, then 500 kind of target in on a positional basis. But for trading perspective, avoid this stock because still near-term setup is weak for the stock.
Right, the near-term setup looking weak for Sun TV. Let's also talk about Max Financial. We have Bikram Murmu who's written in, and he wants to know your thoughts on the counter for the short term over the next 2 to 3 trading sessions. He wants to know if there is more weakness on this counter, given the fact that it has reported a loss on Friday. What would you say?
So since last 3-4 trading session, stock is facing the resistance at around 675 zone. So 675 is the immediate challenge for the stock on the high side. On the downside, the immediate support area is around 646. But the kind of selling pressure which we have seen in the previous session that clearly indicate that if it stocks opens below 650, then possibly stock may break below 645 level also, and then possibly 630 could be the next target. So in today's opening, 650 is very important level to watch. If it breaks those levels, then one should avoid this stock because it may go further down towards 630 level also. On the higher side, 675, 690 are the key resistance area to look at for near-term trade.
Right, that's a call on Max Financial. Let's also take up a query from Suresh Shankar. He wants to know if this is the right time to start accumulating CDSL and CAMS for the long term. Now, CDSL is under that 1,000 rupee mark, and on a YTD basis hasn't done all that well. I think it's down somewhere around 10% or thereabouts. And CAMS, on the other hand, it's around that 2050 mark, and on a YTD basis, it has lost over 6%. Do you think, given the fact that these counters have seen some downtrend, it's time to accumulate it on dips?
See, both the stocks are still in downtrend, and looking at the near-term, short-term as well as medium-term setup, we believe that furthermore pressure is likely to be there in the stock prices as recovery was there in CDSL prices, but still stock is struggling to cross its 1,020, 1,030 level, which is the immediate resistance area on the near-term chart. Stock is trading below to its 100-day, 200-day moving average. Even if we analyze the CAMS also, CAMS is also continuously forming lower top, lower bottom formation on the daily, weekly time frame. So both stocks are still in a bearish zone. If we have to pick one stock from these two stocks, so I would go with CDSL because some recovery is taking place from the recent low. And looking at the near-term setup, stock is now trading above 50-day moving average. So some positivity we can see in the CDSL prices, but still trend is weak. So I would suggest if you want to buy and accumulate stock for long-term perspective, one should wait because still a downtrend is not settled down at this level. We may see further more pressure and stock may breaks their previous swing low also. So for near-term trading perspective, you can choose CDSL compared to CAMS.
I prefer CDSL over CAMS. Last query for today. This one is coming in from Rahul Singh, and he wants to know your thoughts on Birlasoft. Now, this stock over the last 5 days is up nearly 10% or thereabouts. Wait for a dip to enter into this one now?
So midcap IT has done well in recent past, and Birlasoft is one of the stock. And looking at the near-term, short-term setup, stock has managed to give breakout on the weekly chart. Stock is now trading about 200-day moving average, and stock is forming a flag kind of formation on the daily chart. So looking at the near-term, short-term setup, we believe that Birlasoft can show some strength in the near-term setup also. 330, 335 could be the possible target. One can buy and accumulate this stock with stop loss of 290.
Well, that's the call on Birlasoft. Well, with that, we've come to the end of the query segment. If you haven't been able to take your queries, don't worry, we'll try and take it tomorrow. But Rajesh, before I let you go, leave us with some stock recommendations for our viewers this morning.
So we do believe that FMCG space can continue further upside. So from that space, we like Godrej Consumer Product. Stock has given a breakout of its previous swing high of April. And looking at the near-term short-term setup, we believe that Godrej Consumer can continue further upside towards 1,030, 1,040. One can buy this stock with stop loss of 980. Another stock is from capital goods space, that is ABB. Stock is enjoying its almost all-time high trajectory. This is the third consecutive week where stock is forming higher high-low formation. Stock is suggesting that sustained buying action is happening in the stock. So we believe that ABB can continue further upside towards 4,050 to 4,100. One can buy this stock with stop loss of 3,860. The third stock which we like from the banking and financial, that is AU Bank. Stock is now approaching to its multiple resistance zone on the daily as well as on the weekly chart. And looking at the near-term, short-term setup, we do believe that AU Finance can continue further more upside. We are projecting target of 740 to 750. One can buy this stock with 690.
All right, Godrej Consumer, ABB India and AU Small are the three stock recommendations coming in from Rajesh this morning. Well, with that, Rajesh, thanks a lot for taking out time and joining in this morning and, of course, addressing all our viewer queries as well. Well, with that, it's a wrap on this edition of Morning Trade. So it's from me and from the entire team that put the show together. Thanks a lot for watching. But don't go anywhere because coming up next is Opening Bell.